Fellow traders, James Stanley with StoneX and Forex.com. It's been a wild few weeks in silver, and I looked at that in these videos just 2 weeks ago. At the time, silver had tested over the 80 handle, but bulls failed to drive. And as I highlighted there, those major psychological levels, like the 80 handle, could be a really big deal. But since then, bulls have put in another pretty impressive run. They fell just short of taking out that high. And along the way, they've built a formation that could possibly be illustrating a wider or larger pullback in play. I'm speaking of the double top formation. Double tops are, I think, somewhat misunderstood across markets. I think there's a case of many traders taking a sloppy approach to using or identifying double tops. But in essence, the formation is highlighting a major level that's in play that bulls have not been able to drive across, and it's something that could lead into a wider, larger type of pullback. I wanted to use this video to take a step back and look at the double top, specifically the one that we have in silver, but I also want to look at some prior instances that we had in one in gold. I have one in Bitcoin, and also want to look at a triple top that had developed in S&P 500 futures last year. So let's get to the chart, start chopping this up, and look at where we can derive some strategy. So again, first and foremost, from the silver chart, the double top in question is right in here, 82.67. And as I mentioned, I think there's a tendency for many traders to take a sloppy approach to these types of formations. The important thing to me is I want that high to be like almost exactly where the prior high was. And it's because of the logic behind the formation. Now, first, let's take a step back. When we're looking at technical analysis in any form, we're using the past. And the past does not always predict the future. The area where this becomes interesting and possibly valuable is when we could glean information from the past that could still have value in the future. So in this case, that high at 82.67, that's like a high watermark that has elicited sellers not just once, but twice. And that's like the line in the sand that bulls have not been able to cross. The importance of that for the future is that, well, as we get back up towards that level, maybe it stays as that important line in the sand. Now, I mention this because you'll often see traders find something like this, like what we had back in October and November, and they'll call that a double top, not a double top. And the reason is there's difference in those highs. That high right there is at 53.61.5. This high right here is at 53 or 54.41.5. That's a big difference. They're very different prices. And so, the idea that buyers were standing in the way looking to defend that line in the sand for whatever reason, maybe there's a long-term projection level there, maybe there's some central bank that's defending it, whatever, who cares? It doesn't matter. The what is far more important than the why here. But the fact that we broke above it, that's a fresh higher high. That's not a double top. Now, the one that we have right now in silver, I'm considering this a double top because the difference between these two highs is like 9 cents. And so reasonably to me, it's about the same level. The level that we had, again, in that video from a couple of weeks ago, 82.67 marking the high. The level that we had that came into play just yesterday, 82.59. So there's a difference of literally 8 cents between those two swing highs. That is the line in the sand. Now, with a double top, the way to trade it, the way to look at it, is you have that line in the sand, you have that high that is held now twice. That is the fork in the road, if you will. The level between that, the low between those two highs, this is called the neckline. The neckline is simply the low point between the two highs. The way that the formation triggers or activates is it has to break that low. If it doesn't break the low, the formation never comes to fruition, the formation never triggers, there's no double top in play. It's just matched highs until that low gets taken out. Once that low gets taken out, the idea is that that line in the sand that has so far been defended is giving way. It's breaking down. And now we have the reversal set up. And the exciting part about the double top is the projection. The projection is simply going to be the distance between the neckline and the tops. So in this case, I'm just going to take this Fibonacci retracement tool. I'm going to misuse it to a degree to mark a measured move of that double top formation. So we have the highs right here. We have the neckline right here. If this neckline breaks, the projected move from the double top points to a push down to 55.84. So if we get the double top triggering, if we get the formation activating, then the look is for an eventual move down to support around this level. Now, what makes this interesting in silver is if we do get down there, it doesn't necessarily mean that silver is done, that it's cooked, that it has to go down to 40 or 30. This might just be a washing out of a lot of those momentum trades that have tracked into this thing over the past month and a half. At which point then there's very viable support potential down here around those two unmatched highs. But it's in very similar vicinity. Now, like I said, I wanted to look at a couple of examples of double tops that had panned out in the past, but it's important to note, not all formations come to fruition. That's not the point of tracking formations. Again, we're simply looking at the past to try to get some idea about what might happen in the future. The benefit behind this is that if this does trigger the double top, if we do break that low, the possible move thereafter is large. And it's the prospect of asymmetry that makes formations in general an attractive thing to be looking for in markets. Because if I get that neckline break, then the message that the market has sent, that we have a line in the sand that's been defended so far, that we have a fresh low, a breakdown to a fresh lower low, well, that highlights the potential for a trend to develop. Now, we had one of these show up in gold back in October. And, again, it was a very similar story where at the time there was like nary an expectation that the gold rally was gonna end or that the gold rally was over. But let's just walk through this story step by step. As a matter of fact, we'll go off of this chart as we had a pretty beautiful bull pin-up formation that had led into this, another formation of note. But we're going to do this off a 4-hour. So when gold broke out, topped, hit this high of 3,500 in April, and then we digested for the next 4 months. As the trend takes over right in here, notice that it starts back in August. This was right around Jerome Powell's speech at the Jackson Hole Economic Symposium. That's what triggered this whole breakout. We're in the 3,300s at the time in gold. Gold goes marching higher, aggressively so. I mean, continual higher highs and higher lows. This is one of those market backdrops where you're really just looking for excuses of getting on the long side of the move. You're looking for simple ways of finding support around prior resistance and looking for that continuation to play. And again, notice we started in the 3,300s. Now we're walking all the way up to 4,300, and then something else shows up. Look at that. Right there. Those highs almost perfectly matched. Right? They're right in the same area, right at 43.80. You have this high right here, that high right there. I remember talking about this at the time on Twitter, and you got a bunch of people, a bunch of gold bulls that were saying, there's no way that the trend is over. It's run for $1,000. We're in, again, 43.80. Just back in August, not even a couple months earlier, we're at the 3,300s. $1,000 run, 30% plus move in a really short period of time. But then notice what happens. That line in the sand at 43.80, the line that bulls dare not get across. And it sets a fork in the road. Now, that double top has a neckline right there at 41.86. Again, I'm gonna reuse this Fibonacci tool just to get a measured move in here. Now, in this case, that measured move comes in right around the 4K level, 39.94 to be exact. The formation triggers right here with a break of the neckline, and then it continues to run down. And notice it stalls just above 4K, but sellers, they're not done yet. And then they clear it, and that's the projected target. It ends up going down a little bit longer, and then invariably we get a low in place, a reversal, bulls get back on the driver's seat, and then ultimately form a fresh high. But really good example of a double top coming to fruition there, the way that it came to fruition. You get that line in the sand right at the, almost like a perfect identification of that prior high, thereby making for the double top, the neckline, the break, the run down to the projected target, and then at that point, formation is done, and it cleared. But you'll see a lot of instances, especially on social media, of traders saying, "Oh, well, that's a double top." No, it's not a double top. Those highs got to be right around the same area, the same price. And Then only when we get a break of the neckline, we have a possible deeper pullback, maybe even a reversal scenario. What you want to call this, depending on the time frame you're looking at, probably you could look at it a pullback, call it a reversal, a short-term reversal, whatever. But ultimately, that double top played out quite nice. There was another instance, and we can look at one taking place in direction of trend. Simply looking at Bitcoin futures, again, 4-hour chart. And if we go back to like the month of October, so at the time, Bitcoin had just found that resistance around the 125 handle. We break down, we make that fresh short-term lower low. Notice that bearish structure that had started to play in right in there, lower high to lower low, lower high to lower low. And then right in here, notice this resistance that comes in right around 116,500, right there. Again, the criteria is met where that high is right on the same level, right at the same level as that prior swing high. And then you have the projected move, or excuse me, you have the neckline right here, which helps to draw in a projected move, simply taking the neckline up to the high or the top. Projected move down to like 90,975. Again, same ordeal. This breaks. It doesn't instantly break down. It pulls back a bit. But notice what happens there. We simply find resistance at prior support. And then sellers take this along for a ride. And this is I wanted to look at this one because this was a mid-trend double top that played as sellers were beginning to break this down. And at the time, if you were looking for trend continuation, we had that lower low into a match of the top, breaks the neckline, pullback, resistance prior support, and then go. And that, again, it cleared in a very big way, very quickly, mid-trend. There's also the triple top formation. So this one showed in ES last year, and I'm going to pull this off of the daily chart. As a matter of fact, I don't need any of that. We'll just remove all those drawings, and we'll look at it raw. It's right in here. Right here, like it's 6150-ish. But same deal. You want those highs to be like right in the same vicinity, right in the same area. You don't want to see much, if any, give. You want that to be the level that ultimately has been defended in a vigorous fashion. And same deal, we could simply draw a neckline and a projected move, and the projected move here was like 54.67. Notice we cleared that with significance. But the whole point of the formation is you have that high watermark that so far has been defended. It has continued to be defended. In this case, it was defended twice after it initially came into play. And it points to the possibility of a stronger pullback or a reversal scenario that could soon show up. Now, you can also look at these on the other side of the market, like a double bottom. And when we have something like we've had in stocks, these could be really, really impressive when they do show up because we've had a massive rally from those April lows. So if there is a double bottom formation, then that simply becomes a way to look at getting long topside exposure. Let's look at this on the 4-hour chart to see if I can find one. And again, those lows need to be like right in the same vicinity. That's too far off and it won't qualify, it won't fit. That one is pretty close. And again, it depends on how accepting you want to be. I am not accepting at all, but that is darn near perfect. Right there. Notice you got that swing low in ES at 62.41. Notice that same swing low comes into play right here, right at 62.41. I mean, we might be looking at 62.39.5, so it's literally like 2 ticks off. Close enough for me in that case. I mean, we're within a point. But with the double bottom, same deal. The high between the two lows is your neckline. The distance from the neck down to the low, that's going to give you the projected move. The projected move in this case was 66.97.5, which comes in as resistance just a couple months, a month and a half after it triggered. Those double bottoms could be equally impactful, and in this case, super attractive because now you have a bullish breakout formation going in the direction of the broader trend. And notice those lows, again, they're right there on top of each other. If there's any difference between the two, even like we had here, it's more difficult to make that case. But, you know, many people are sloppy with this kind of stuff. I think with technical analysis, it's worthwhile to be technical about it, if you will. And so I want to see those lows printing in exactly the same spot, or those highs printing in exactly the same spot. And that's exactly what we have in silver right now. So I don't want to call a big picture reversal in play yet at this point because, again, it's way too early to say that. But there is a double top, and that could lead to a deeper bearish move. That could point to a pullback down to around the 55.84 level. If it happens quickly, then that's going to probably look more attractive for support when it invariably comes into play. But if it grinds down there in a slow fashion, that reversal could take hold. And just like we saw in the move in gold, we could blow through that projected target and it could run for a little while longer before maybe finding support around prior resistance or maybe finding support around 47.5, something like that. But double top formation. Awesome formation to have in your back pocket when they do show up. As you see from these charts, they don't show up very often, but you could find them on 4-hour charts. You can find them on daily charts. You can find them on weekly charts, and they're awesome when they do show up. But again, remember, not every formation comes to fruition. That's the important thing to remember. Risk management is always the priority, and that's the whole point of looking for formations, the prospect of asymmetry, so that when I do hit a move, the possible upside could be sizable. And expecting always that failure is a possibility and taking a realistic approach to doing this. But that's what I have for today. Thank you for your time, and as always, happy trading, ladies and gentlemen.